Evergrande, China's second largest property developer, has recently been in the news due to its dire financial situation. The company is on the verge of bankruptcy, a position that a few years ago was inconceivable. In this video, you will learn what happened and how the story might continue. Evergrande was once at the forefront of China's thriving real estate market, an industry that seemed to convey so much confidence it had millions of investors pouring money into the market. Today, Evergrande is more than $300 billion in debt, a figure that makes it the single most indebted company in the world. The concerns about the rapid demise of Evergrande have raised more worrying questions about China's real estate market as a whole. For many, there are serious concerns over what the long-term impact of Evergrande's financial struggles will be, with many reminiscing over the housing bubble that ignited the US recession of 2008. There's a strong call for the bailout from the Chinese government if the economy is to escape the same fate that befell the US when Lehman Brothers closed shop. If you think this might be an exaggeration, then you need to take a closer look at the real estate industry in China. What we will discover is a stinking can of worms and a looming dark cloud over what could turn out to be the mother of all real estate crises. To understand the gravity of what Evergrande is currently experiencing and the precarious situation of China's real estate industry, we must first appreciate the size of the real estate market in China. According to a report from Goldman Sachs Group, the total value of the real estate market in China is a whopping $52 trillion. That report came back in 2019. According to the Wall Street Journal, China's real estate sector accounts for a huge 29% of the country's gross domestic product. For years, China's real estate sector has been rapidly expanding, and at the core of this expansion was the perceived rate of urbanization within the country. Back in 2019, China's rate of urbanization was pitched at an incredible 60%. For many investors, it felt like open season. Developers believed that the expansion of the property market was far too important for Beijing, as the country depended on the development of this market to maintain the rapid rates of economic growth and the increase in net worth of households. This perceived importance of the real estate sector to Beijing provided a sense of false security to the developers, who strongly believed that even in the event of a downturn in the sector, the government will be compelled to step in and provide relief to avert social and economic disaster, just as it did during the stock market meltdown of 2015. With that mindset, real estate developers went on a construction spree. Between 2013 and 2015, the rate of new construction projects was on an alarming increase. During that period, an explosion of construction jobs kept the economy strong. In 2019, the number of new constructions hit record highs. In that year alone, developers initiated some 18 to 19 million new housing units. We would have seen a rise in this trend in 2020 had the pandemic not devastated the whole of China. Despite this, the construction industry only suffered a marginal slowdown. Unfortunately, unknown to the developers, they were only creating a housing bubble, one that could explode if not checked. Despite the rapidly increasing rate of construction, it is estimated that over 65 million homes, which make up 20% of the real estate market, are unoccupied. This is a massive figure. By international standards, those numbers are worrying. To put this into perspective, it implies that there are enough empty houses in China to cater for the entire population of France. Real estate developers are now faced with a painful reality: the fact that, at this point, the supply for housing has more than exceeded demand. There just aren't enough people to fill in these new homes. This right here is the fundamental crack that could bring China's housing industry to its knees. And if that eventually happens, it will become the greatest housing crisis in modern history. So why is there a shortage of demand? Despite their construction spree, developers have failed to take into consideration an important statistic: the rate of household formation in China. China's household formation rates peaked between 2013 and 2015, at a period when the working age population of the country was starting to decline. If the developers had done their homework, they would have realized the need to slow down the creation of new housing projects. Instead, lured by the increase in housing prices, they ramped up construction rates. Yet, according to the Rhodium Group, future household formation rates in China over the next decade are projected to be between 5 to 7 million per year. Just a decade ago, that number was between 6 to 10 million per year. Contrary to previous expectations, the rate of urbanization in China is on the decline. And an explanation of the projected lower rate of household formation could come from the decline of the rate of annual marriages, which has taken a 40% hit from its peak in 2013. The reality is, nowadays there are far fewer people who are likely to require new homes. To make things worse, the prices of these newly constructed homes exclude a huge chunk of possible buyers, considering that in China annual income is only just above the global average. So what does the future of the Chinese real estate market look like? The alarm bells may be ringing right now, but in truth, a total breakdown of the housing industry is not imminent. Since 2017, China, realizing the situation that the real estate market could find itself in, took measures to reduce credit growth. And in late 2020, new regulations were imposed on developers' financing. In what is now referred to as the 3 red lines, these regulations were based on 3 key financial ratios. The introduction of these regulations has deprived developers of their key source of funding, borrowing from banks. This has forced them to, instead, obtain larger shares of revenues from the sales of pre-constructed apartments. This has also been accompanied by aggressive discounts to incentivize buyers and a scale back of plans for new construction and new land purchases. Most developers will be hoping for a rise in sales this autumn, a season which is known to be the peak period for sales in the year. If developers can manage to hit their targets during this period, they will be in a better position to manage their finances till the end of the year. But if they fail to hit their targets, it could foster panic within the market. With regards to Evergrande, the government is more concerned about protecting homeowners, contractors and suppliers, and not necessarily Evergrande's shareholders and investors. So while some local governments are preparing to take over some of the construction projects managed by Evergrande, the losses accrued will be imposed on the financial investors. Whatever the outcome of an intervention from Beijing will be, the imbalances within China's real estate market strongly indicate that there will be reduced construction activities across the country over the next 2 years. This could culminate in a weaker economy for China in the coming years, a reality that could take place sooner than many observers expected. If you enjoyed this video, please leave a like and let us know what you think in the comments. Stay tuned for further updates and have a great day.